White House science and technology advisor Michael Kratzio said some companies are blaming artificial intelligence for layoffs they likely would have carried out anyway, arguing that the explanation plays better in the press. On Tuesday, Kratzio said during an appearance on the Moonshots with Peter Diamandis podcast that some businesses are attributing layoffs that they likely would have made regardless to AI because the narrative is more appealing to investors and the public. Quote, I think like a lot of folks these days, like when they're doing a layoff that they would have done anyway, just like to assign it or blame it on AI because it plays better in the press, end quote. That was from Kratzios, by the way. Podcast host Peter Diamandis suggested companies may benefit from framing job cuts as AI-driven efficiency improvements because markets often reward higher productivity with fewer workers. Quote, and their stock price goes up if they are, producing more revenue with fewer people, end quote. Precisely, yeah, end quote. That is from Kratzios on the response. He said he remains optimistic about AI's long-term impact on employment, arguing the technology could create new opportunities even as it changes existing roles. Quote, I believe in the long term. I'm very optimistic about the impact that AI is going to have on jobs, end quote. Earlier, OpenAI CEO Sam Altman warned that public skepticism around AI is rising, with many blaming the technology for higher energy costs and layoffs, even when AI may not be the direct cause. Apollo Global Management chief economist Torsten Slok said there is, quote, zero evidence, end quote, that AI has triggered broad employment losses, pointing to hiring in AI implementation, data centers, semiconductors, and energy sectors. He said the AI boom could increase economic activity through Javan's paradox, where efficiency gains create more demand and new opportunities. Amazon's founder, Jeff Bezos, ticker AMZN, by the way, also rejected predictions of mass-driven AI unemployment, arguing that AI will improve productivity, empower workers, and potentially create labor shortages as lower costs drive economic growth. Microsoft and Meta, that's ticker MSFT and META, reshaped their workforces around AI as both companies pursued greater efficiency and AI-driven growth. Microsoft eliminated 4,800 roles while saying the cuts were due to business changes, not AI replacing workers, and planned to invest in AI training. Meta moved about 7,000 employees into new AI-focused divisions while cutting roughly 8,000 jobs, creating an AI native teams designed to improve productivity and accelerate AI deployment. Easy for me to say on there. So this has been my prediction. It might remove some remedial jobs. Is it going to cause this catastrophic damage that everyone's worried about and talking about on podcasts? No, it's not going to do that. And now, thankfully, we have data showing that that was a bunch of nonsense.